Candle Range Theory Trader back with you with another video just showing you the blueprint on how to make an extra $500 to $1,000 a week using the midweek reversal. So let's not waste time and get into it. The first thing you'll need to know, you need to know the pip value and the minimum account balance that you need. Margin and your account balance is going to play a huge role in this. And let's not waste time here or set any false expectations. The higher your account balance is, the more likely you are to have this be a success for you. And of course, the higher leverage you have, the better as well. So these figures assume, okay, these figures assume that you have at least 1 to 500 leverage, okay, and they're going to be based on the quote currency in the pair, meaning that when you see the USD, that's all the pairs ending in USD, all the pairs ending in JPY, ending in AUD, NZD, CAD, CHF. Okay, so you wouldn't use this lot size for something like USD JPY. No, this is for pound dollar or euro dollar. This is for Aussie yen. This is for like a pound Aussie. This is for something like you could say pound New Zealand or even dollar CAD or CAD Swiss. Okay, CAD Swiss is the only one that ends in Swiss. The only one that's not up here is pound. I forgot about that one, to be honest, but you can just figure that out on your own. But here we go. The lot size that you're going to need, and we're going to set our pip value at $2.50 per pip. So for every single pip that price moves, it's going to be worth 250. And these are the lot sizes depending on the quote's currency. This is how much money you're going to need in your account for this to be worth this. Okay? In other words, you need $58 in your account to take a 0.25 position. The minimum that you should have, because we're going to do about 4 positions, is about $300. Most of these I just rounded up, but I just multiplied most of these numbers by 4 and just rounded to the nearest either 50 or 100. Okay. So in order to take a few positions for 0.25 lot size, you need to be at least $300, 200 here for the Aussies, 450. The Aussie and New Zealand pairs are the pricier ones. The cheaper ones are the ones ending in Swiss, the one ending in Swiss, which isn't a lot, and the ones ending in USD and JPY are on the lower side as well. But this is how much you would need. All right. So here's the thing: if this seems like a lot of money to you, you do have the option to use an instant funding account. Okay, you do have those where you just buy one of those, try to catch a coupon or whatever. And one company I know of, even though I don't recommend any companies, I'm not an affiliate for any of them. You can get like an instant funding account. I know one company, instantfunding.io. You can get a $5,000 account from there for like, should be less than 225 if you have a coupon code. They always have coupons that they're using. You can also do a challenge account as well. But as well, with the $5,000 account, what that's going to give you is $500 worth of drawdown. So if you had a $500 account, then you'll be able to take any one of these types of positions comfortably because you have more than enough. Okay, you have $500 to play with. Okay, but it's not the whole 5,000. That's a little trick they use. But if you go that route, you need to know their rules, because the last thing I want you to do is buy a challenge, start adding all these positions, and then they say, well, you use too much margin or too much leverage. They'll get you if they can. If you don't know the rules, they're not going to give you a refund. All right. So you got to know what you're getting into. I don't want to deal with that. So I just trade my own money. Okay. So here's the goal. How do we get to make $500 a week? Okay. We want to make 4 entries that are worth $2.50 per pip each. Our stop loss, we want to be between 10 and 15 pips. Okay. So on the worst case scenario, if we just have one entry and let's just say price just spikes against us, that's a loss of $25. Okay. And if you add if you have a 15 pip stop loss, then it will be a $38 loss. Okay. At the same time, a 50 pip gain would be $125 to a 75 pips take profit would be $187 gain. So anywhere, that's the ballpark of what you'd be looking at. But the key is to watch your entries. And if all your entries hit the take profit, that's going to be between $500 and $750 per trade total. Okay. In other words, it's not just 125 and that's it. You're taking 4 of these 125 trades. So it's 125, 125, 125, and 125, which puts you at 500. This is 187 plus 187 plus 187 plus 187, which puts you at the 750 range right there. Okay. But your lot sizes are still all the same right here. Okay, so that's already done for you, or you can play with these numbers. It doesn't have to be a set 250. I just put 250 just because it was easy to just say the 500. All right. So that's where that comes from. So this is the most important part of this whole thing is risk management. Keep an eye on your equity. If you have four positions open and price starts to go against you, you need to have in your mind, where do I want to get out at? Okay. Because if you are down by like say $50, maybe that's not that bad. But if you have four positions against going against you, you got four of them open, and you're down $100, and your account balance is $300. See, that's almost half your account. And don't think you can't be wrong using this method, because you can. All right, so you already need to have in your mind, okay, when I first start this, my initial risk is only going to be $25. All right. But as you add the positions, you're going to want to be more flexible with your entries. I can't tell you exactly what to do. I watch price, I watch equity, and I watch price. You got to get a feel for that for yourself. The only thing that you shouldn't be doing, though, is allowing the whole balance to get blown out from taking three trades and they all go against you, and then you're out $300 in one trade. That's not it. That's not what I'm teaching here. Okay. So you need to have in your mind, whatever you're comfortable with losing, that's what you need to have in your mind and say, okay, either I set the stop loss for all of these, or I just press the button. Trade Locker has a great feature for that. We just close all the positions, you get out, and you're done. Now, another option you could take is some people, they like to, when they add another entry, they'll put their first entry to break even and then add another entry and put it to break even. I don't do that only because it can lead to more stop outs, and I keep all my entries together, and I'll show you that in just a second. So if you space them out, that's going to affect where the take profit is, but it just depends. All right, so let's see here. Let's give you some real chart examples now. Now, this is more about the money making aspect of it and not so much about trading. So here's the deal. I just wanted to show you a brief week where it is possible. This is the week of July 2025. Here's one midweek reversal right here on New Zealand CAD. High of the week on Wednesday, tanks for the rest of the week. Okay, let's say this trade right here I'm showing you worth about $500. Next week in July, okay, this was pound New Zealand. Monday, Tuesday, Wednesday made the high of the week. Your trade is right in here. Boom, price goes to the downside. Okay, but you have to be patient enough to wait for this Wednesday play out to happen. Okay, but there you go. That's it. The next one, this is a long example on week 3 in July. Okay, playing off ideally the Tuesday and Monday range. Anytime price sweeps below Monday and Tuesday and closes back inside of it, that is an awesome sign. So your entry would be somewhere down in here, and then Thursday and Friday, bang, went all the way up to the prior week high. So that would have been an awesome trade. There is your midweek reversal right there. That's for week 3. And then week 4, this is another long example where price sweeps below Tuesday and below Monday, takes both of those out. Your entry's right here somewhere. As long as you get in below the weekly open, that's ideal. And then you got Thursday and Friday for an awesome payday for a midweek reversal. And that's it. I've just shown you $2,000 worth of trades in 4 weeks in the course of July, all midweek reversals across various pairs. So it is possible. Will every single week give you a midweek reversal? I'd say at least one from the back testing I've seen. But is it possible that there wouldn't be any in a week? Of course. Okay. Nothing's guaranteed. But in conclusion, the previously mentioned numbers, that was for $500 a month. If you want to make that was for $500 a week. If you want to make $1,000 a week, you just double all these numbers. So the numbers that I show you right here, just multiply all these by 2. $600, $400, $900, $900, and so on and so forth. Okay, you just got to multiply even the lot sizes times by 2. All this margin multiply by 2. Minimum account balance times by 2. All right, multiply by 2. You can figure that out. If you want to go down and say, you know what, that's a little pricey for me. Say you want to do $1 per pip. That's fine too. Just divide everything by 2. It's a little imperfect. It'll be about like $1.75 or so, $1.50. I don't know. I'm not a big math person. But if you want to take it down just to start, I'll start smaller. Just divide them. Either way, doesn't matter to me. Okay, so when you're using the midweek reversal, that's why I said if you use the midweek reversal for these, you're only trading 1 to 2 days a week, either Wednesday or Thursday, and that's it. And your only focus is to find one type of setup, so you become like a specialist. Okay. Your goal is just 50 pips and no more. Don't try to get 1,000. Don't try to get 100. It's just 50 pips per entry or 75 pips per entry. And that's it. It doesn't care if price drops 1,000 pips. It doesn't matter. Get your piece of the market and get out. All right. Risk management is still rule number 1. Don't let your losses exceed your gains. It is more than possible to blow an account when you start to scale in your positions. Okay. So be careful with that. Do not sit at the chart all day, set price alerts, And what I mean by that, when I say set a price alert, I'll give you this example here. Let's say I get in right here. I want to set a price alert below this range because with the midweek reversal, you're expecting price to stay inside of this range, this low of the day. Price should stay above that green line, Monday's low. My price alert would be below Tuesday's low in this case. Price should not come back there. I will set a price alert right here above Wednesday's high. Okay, price should not go back up here because this is a tight range. So that's good. That's where I will set my price alert. For this one, if my entry is right here, I will set a price alert above Wednesday's high. So you're either going to set a price alert above the range or above the high of Wednesday's day if you're short, or below. This is a wider range here. So, but that's where the price alert is going to go, just to let you know and give you a heads up. As long as that price alert doesn't go off, you should be making money. Okay. But if it does go off, check your position, check your equity, check your drawdown, and make sure things don't get out of control. Okay. So, and then once again, funded accounts and challenges are an option. But remember, you do have a profit split on that. You got to share. You won't make as much money as you would if you were trading your own account. And remember the prop firm's rules. Don't break any of their rules so that you can still get your payouts. I don't deal with that. I just trade my broker. And when I request a withdrawal, I would get it. I've never had a payout denied from a broker. So I just prefer that. But our prop firm is a viable option for people? Yes. Our challenge is a viable option? Yes. But this is your blueprint right here. Play with numbers. This is a general framework, but hopefully this will give you an idea of understanding equity, margin, your value per pip, and how you want to write your own paycheck just using one simple setup, which is the midweek reversal. And if you want more information on the midweek reversal, there's a link in the description to look at that video. Okay. So thank you for watching. I appreciate your time and attention. Have a great rest of your day.